I often get asked by clients if I can help them with their tax returns. Now, there's a bit of a misconception around what accountants do and what financial planners do. I'm probably too close to the subject to see that there is a misconception. But actually, a lot of people get this wrong. They think the accountant might be doing something the financial planner should be doing, and vice versa. Now, I can't do tax returns. What essentially an accountant does is they look backwards, financial planners look forwards. So let me break it down. For businesses, particularly, but also individuals, I've got clients who do their own accounts and they use an accountant. They're looking backwards at the previous tax year. Now, an accountant's job is to make sure that you're compliant, that you're paying the right level of tax from the previous tax year. So they're going to ask you for sets of accounts, expenses, how much you've paid yourself, how much revenue you've made if you're a business, how much interest you've earned if you're an individual, or dividends or capital gains that you might have realized. They will then take all of this information and they're essentially going to calculate from that what tax you then owe. So what they don't typically do is they do not then tell you, right, going forward, you should now be doing this. You should put X amount into your pension. You should put this much into your ISA. You need to be doing this much to claim this tax relief because this allowance hasn't been used up. Some accountants will raise this with individuals, and actually that's where I tend to work very well with accountants. So for some of my clients, I have a selection of accountants that we work with together, and the accountant knows exactly where their jurisdiction ends, and they'll introduce me to that person to say, you now need to go and speak to Tim, and vice versa. Where clients ask me, can you do my tax returns? I say, I can't. I'm not a qualified tax advisor, which confuses them a little bit because they go, well, you've been recommending pensions and ISAs and talking about tax reliefs. Yes. So I understand the tax legislation. I understand allowances. I understand where we need to be utilizing tax reliefs. That's my job, making sure that the investments that we've put away for the long term are in the right tax structures. That doesn't mean that I can calculate the tax that's owed by someone, an individual or a business, from previous tax year. So accountants look backwards, financial planners look forwards. So typical questions that a client would ask to both an accountant and a financial planner that would get different answers are things like, how much money should I be taking out of the business? Now, an accountant is going to break down to that client the different tax bands. Maybe you should take income up to the high rate tax threshold, and then we can pay you a salary of X amount and then dividends of X amount, and therefore that's going to be quite efficient from a tax perspective. Now, my job as a financial planner would be a little bit different. I want to understand how much that client actually needs to live. And then once I've broken down what their budget is, we can then work out what excess they have to do something a little bit more creative with. When I say creative, I mean more efficient. So utilizing pension allowances, utilizing ISA allowances, so that if we are going to be paying up to certain tax thresholds, where's that money actually going? So there's always going to be follow-up questions from my side of things because I'm looking forward. I want to understand, is that money being put away for the future? Is that money being put away to bolster an emergency fund? Or is it to go into a sort of short-term savings account for some large expenditure that's coming up? I need to know what those things are so that I can give the right advice. An accountant will be looking back at the year that's just gone. What is the revenue? How much income can we take out at the most efficient tax rate? That's going to be the answer. Another question might be around pensions. So somebody might ask an accountant, should I put money into my pension? And the accountant will say, well, it's a tax efficient thing to do from a corporation tax perspective because pension contributions from the business are an allowable expense. So it's a great way to bring down the corporation tax bill. Now, as an advisor, I would say the same thing because that's very true and is very tax efficient, but I'm more focused about what that's going to do for the client going forward. So yes, the happy byproduct is that it's very tax efficient in the tax year that we make the contribution. But then the accountant can't expand on that. They can't say, where should that be invested? What pension provider should we be using? When are we looking to access that money? What plan does that form part of? Whereas those are all the things that I'll be focusing on. How is it invested long term? When are we thinking of accessing it? Does that fit in with the plan that we're going to retire in 10 years' time? We're going to start draw down from that pension at that point. In which case, do we need to structure the portfolio differently as we go through the next 10 years? Are we maxing out the contributions? Are we utilizing carry forward? Now, that's a concept that a lot of people aren't really that aware of. It's essentially where you can utilize your allowances that haven't been fully maximized from previous tax years. To be fair, that probably is something that an accountant might talk about, but again, they have to be very careful around giving advice around pensions because they're not qualified to do so. So again, the difference is there is the accountant looks backward, the financial planner looks forward. So why there's a clear line between accountants and financial planners is because we're both authorized to do different things. So I'm regulated by the FCA, which is the Financial Conduct Authority, to give financial advice. I'm continuously monitored. I've taken qualifications. That allows me to deal with clients and actually provide them with this sort of high-level detailed advice. Accountants are qualified to deal with tax advice, which I'm not. So that's their scope. That's keeping their clients compliant. So they have their regulated area that they give advice in. We have our regulated area. There is actually quite a clear line where the two don't cross over. The perfect way of dealing with an accountant or an advisor is to do it together. So the best success stories I have with my clients is where I work closely with an accountant. We have three-way conversations. We're all on the same page. We're very clear about where the line is, where I step in to help the client, where the accountant's jurisdiction is, and that's the best outcome for clients. I think if you're just relying on one of those two specialisms, then there's a massive blind spot that you're missing. Working with an accountant, working with an advisor, make sure that the right questions are being asked both now to make sure that you're compliant and paying the right amount of tax. You haven't got HMRC knocking on your door, but also you've got somebody that's looking out for you, your needs, your family needs, and your future. And particularly I find business owners, they know everything about their business, but they don't look after themselves. That's where we step in and can really be a massive, massive help to them.